Adobe Inc., ecosystem lock-in, generative AI, and the fight for creative software's future. A company trading at $237 a share, a market cap near $95 billion, and a 30% net margin. And yet, as we'll see, the market isn't fully convinced. Here's the puzzle. Adobe just posted record revenue, $23.8 billion, $7.1 billion in net income, and its stock still fell roughly 35% over the past year, 44% over 5. Record fundamentals, falling confidence. That gap comes down to one question. Can generative AI commoditize a moat that used to be built on workflow habit alone? To understand that, picture Adobe as one interlocking system, not 3 separate businesses. Digital media, Creative Cloud and Document Cloud, is the professional workflow layer. Digital experience is the enterprise marketing layer. And Firefly, Adobe's AI, is the connective tissue running through both. Once you've learned Premiere Pro's muscle memory, switching is expensive. That's the moat. Firefly's edge starts upstream at the training data. It's built on Adobe Stock's licensed imagery, not scraped from the open web, which makes it commercially safe for brand work. From there, it's embedded natively across Photoshop, Premiere, and Illustrator, orchestrated by a creative agent that runs multi-step workflows from plain language, and extended through APIs and partner platforms like ChatGPT and Claude. And it's showing up in the numbers. AI-influenced ARR has already crossed $8.4 billion, more than a third of Adobe's $25.2 billion total. Firefly users have generated over 22 billion assets, reaching 6 million monthly users, with more than 72% of Fortune 500 design teams now using it. But the moat isn't uniform. It holds in Creative Cloud, where switching costs are steep. It's cracking in UI and UX design, where Figma is now the undisputed leader, and in entry-level tools, where Canva's free Affinity suite is undercutting Adobe Express. Add in pricing backlash over credit caps and fee increases, and you get exactly the friction investors are pricing in. The clearest example: in 2022, Adobe tried to buy Figma outright for $20 billion. Regulators blocked it. Adobe walked away paying a $1 billion breakup fee, and Figma went on to dominate the category anyway. The lesson: buying your way past a threat is no longer a reliable strategy in software. So Adobe's pivoting. Instead of one proprietary model, Adobe Express now embeds Gemini, OpenAI, and Flux alongside Firefly. The creative agent now runs inside ChatGPT, Claude, and Slack. And a new NVIDIA partnership adds 3D and compute at scale. The bet? Win as the orchestration layer, not the only model. The fundamentals underneath all of this remain strong. 89% gross margins, 62% return on equity, and a conservative balance sheet with room to keep investing. 5 takeaways for any platform leader. Lock-in isn't invincible. Licensed data is a real trust advantage. Interoperability now beats walled gardens. Pricing trust breaks faster than it rebuilds. And compute partnerships are now first-order strategy. The moat isn't gone, it's being redrawn. Adobe's next decade depends on how fast it can turn Firefly and open partnerships into a new kind of lock-in. Thank you.